Okay, the last 3 platinum investors left in the world. Let's talk to them.
Hello, everybody. Firstly, I want to thank everybody for staying because we got the graveyard shift. Bernard.
No, we're here for the wine. Just get us out of the way. Just get
So
past us.
we do realize that we're standing between you and your wine. So we'll make it as fun as possible and remind everybody of how great PGMs are. So my name is Mametja. I'm the CEO of Moshe Capital. And I'll start on my far left. We have Thabiso Sekano, known to most. He heads up mining and metals at the IDC. And next to him, we have Adrian Hammond, Executive Director at Standard Bank. And then right next to me, we have Bhulose, who's Portfolio Manager for Resources at the PIC. Gentlemen, to start us off, perhaps I'll start with you, Adrian. Let's start right at the top. You know, there's been a lot of talk today. People are very positive. It's the last session, so we can be honest. Do you really think that, the state of PGM industry is, what is it? Is it good? Is it bad?
Can I just say, on average, the share prices are down about 5% today.
Yeah.
Is it?
It's more. It's more. It's
okay,
over 11%.
It was earlier today, yeah.
Yeah. So, and, is there a potential recovery? Capacity, a lot of people are saying the supply deficit in the next year and a couple of years. Where are we? And how are we going to do? And there's a whole lot of, this euphoria around Trump and everything that's happening. Walk us through that. And a lot has been said today, so give us your perspective. It's just a start.
Where to start? I mean, just to Bernard's point about special metals, these are commodities, they go through cycles, so there's always going to be an interesting time. There's always going to be a dark time. But I think we're through the worst, the views out there are far and wide about PGMs, and I think a lot of people don't fully understand or appreciate. It's a very complex sector. It's extremely opaque. But I'd say on balance, as a house, we are becoming more constructive, but I wouldn't be banging the table right now. Certainly, there's been a lot of excitement around the shares year to date, and they run quite hard. But there's a couple of reasons driving that. But to be honest, there's a bit of FOMO. The investors missed out on the prior cycle, so whether you understand what you're doing or not, you might decide to buy the share. Okay, there's a bit of platinum, there's a bit of gold linkage as well, safe haven, precious status, also a similar trade. But fundamentally, I think it's been a story of both demand and supply. So the EV narrative has been supportive, certainly a slowdown. BEV penetration is only up 1% on average year on year, and that's nothing. And you've got the experts out there forecasting around 40% by 2030. So they really need to look at those forecasts again. So that's certainly being supportive. And what that means from an OEM point of view, how do they think about the future? So do we start planning for more ICE? Do we start buying forward again? Because at the end of the day, it's really when the OEM decides to think about risk and manage risk more and buy metal forward, like they did during the 2022 crisis where PGMs went through the roof because it was the forward buying. Now, demand is down, supply is down. We're sort of at this very balanced period in time, but do the OEMs really start thinking about planning ahead because we're going to be selling more ICE? That's on the demand side. On the supply side, look, I think we're all talking about cutting mine supply, but really I think the market's overlooked secondary supply. Secondary supply is down like 50% since the high, which means overall supply is down 15%. And we are talking about shuttering operations. Primary supply is very sticky, and I think don't expect any surprises or catalysts there. There may be one or two. It's not going to move the dial, but we are down 10% since 2019, but then you can expect that trend to continue. So you can see where I'm going at. Things are getting interesting. But really, at the end of the day, the tough job for Mduduzi is to really call the pinch point, and we try our best to do that. But it looks like the destocking cycle is starting to take a turn, but I'm not entirely convinced yet.
Interesting. So, I mean, with that in mind, maybe I'll come to you, Mdu. Yeah, we're down like whatever percent today, just in the teens today. To what extent are you upbeat or less enthusiastic on PGMs? In particular, given the geopolitical situation, it is obviously driving what is happening around. So, are you investing more or less? And as Africa's biggest investor, we want to know where you're going.
Sure, yeah. There's a lot in that question. So maybe I'll just start at the top. So in the short term, noise will always be there, right? So you get presidents change, GNUs come and go, et cetera, et cetera. So there will always be noise. Now, to Adrian's point,
but do they all have to come at the same time, right now?
Unfortunately, right? And I think, Bernard, you picked the day quite well, because I think it speaks to everything that we do. So when you then think about a company and its sustainability, and I think with all the companies that we've met as the PIC, we always encourage caution. Caution in terms of whether you're buying something new, whether you're expanding your own projects. Caution with that balance sheet, because for those who were around in 2008, we know what that did to the industry. For those that were around again in 2015, 2016, when China had a bit of a hiccup. So the companies that have proven to survive over time are the companies with strong balance sheets, companies that are prudent in terms of the euphoria or getting excited about one thing or another. Those are the companies that tend to survive over time. And it's not just for us as investors, it's also the expectation that companies create when they announce a project in a particular neighborhood or in a particular rural area, because all that comes with, over time, is this going to add value to that area or not? And the switching on and off of projects actually makes us look bad as an industry, because over time, the communities where we're trying to start these projects lose confidence in the stories that we keep on telling them when prices are good. So what we encourage at the PIC is prudent management. Don't chase transactions too much, because we know that these cycles will come. And when the cycles come, and if you've been a prudent management team and board, what then happens is you have a strong balance sheet at the time to then take advantage, of that weakness in the environment. Now, what's happening with, with the US and the president there in terms of announcing tariffs, in general, history has proven that the more tariffs you put around the world, the more it has an impact on global growth. And what's likely to happen, at least in the short to medium term, is we are likely to see a dampening mood from a global growth perspective. And for this industry in particular, it becomes quite important to then think about how companies remain sustainable in an environment where there isn't as much excitement and there isn't as much potential for demand, whether it's jewelry or whether it's cars, etc. So that's how we think about it.
So I guess producers ease into it, as Mdu says, don't make hasty decisions. Thabiso, I'll come to you. The IDC, and when people hear the IDC, they always wonder, will the deals close? But in today, I want to...
It's not me, eh? This time it's not me abusing you, it's her. Let me just point the fingers.
So I want to know, in today's terms, are you guys as the IDC investing in PGMs still? We've had the newcomers into the market. Are you supporting them? Where are you going with them? Are you saving companies that are in trouble? But so tell us, are you investing in PGMs, in PGM producers still?
So Bernard...
No, not Bernard. I'm innocent. This is Mametja, Bernard. Just direct
We
your...
look the same, clearly.
I think next time don't put me with Mametja again on the same panel. You're just the same, I
Oh,
think.
we're just the
Yeah.
same. We are one of a kind.
Look, Mametja, previously, I mean, historically, we've seen quite a number of investments as the IDC in the sector. We've got an exposure book of about just under 5 billion rands. I
5
think
billion. Sorry,
Is
can
it-
we check his microphone? I think there's just a ring feed now.
Okay.
Please carry on, Thabiso.
Is it better now?
Yeah, I'll carry on.
Okay. About 5 billion rands. It is not cheap to mine platinum or to create a platinum mine and to get it to a point where it's working. I mean, you would have looked at the story of this Ivanhoe project, Platreef. It took forever. We've been talking about this project for the past 10 years and so on. So we're not necessarily seeing a whole lot of people who are coming to us saying, fund this platinum project for us, simply because the amount of money that you require to start this a mine is quite substantial. We've been talking to several other majors over the last couple of years also, who've shown interest in restarting historical projects, but that has not amounted to anything so far because the checks that are required to execute these projects are quite substantial also. But of course, as the IDC, our mandate is slightly different. We would entertain talking to anybody who comes to us with a project that requires our support. And now, you know, summing up today, I'm slightly a bit confused about how I would feel if somebody was to approach me with a platinum project. The panel just finished now is quite optimistic about the prospects for platinum. But earlier on also, I was hearing the stories about battery electrical vehicles and just the temporary slowdown and how that would influence passenger cars in the future. But I suppose the way we would look at any project that comes through our doors would be, you know, the economic merit of it. The market fundamentals have to stack up in order for us to entertain such a project. Thanks.
Thanks, Thabiso. And I mean, to give you guys credit, you have saved some companies and also supported companies when they start up, which is good for industry, as your name says, development. I would like to come back to you, Mdu, and maybe talk about, you know, ESG, traceability of, you know, materials through the supply chain. We hear a lot of this, and, you know, as a PGM player, I think right now people are just looking to survive. How important is all of this? You know, do you as an investor prioritize guys that that support and demonstrate ESG and commitments, you know, into sustainable practices?
Yeah, so I've got a very short and a long answer. The very short answer is we support companies that generate great returns for the pensioners. The slightly long answer is at the PIC, we always have a balanced view around how you operate, what you look like when you operate, and I'll explain that in a bit, and obviously then that environmental impact. Now, I'm a miner by background, so when I then think about ESG, I think there is enough people around the world that are talking around the E, and I think as South Africans, if I'm being blunt, we've got no business talking about the E. We've got lots of S problems. So what do I mean? We have a high rate of unemployment in this country. I get very concerned when people talk about whether it's coal or whatever, you know, mines we're dealing with. We need to accelerate closure because, you know, there's lots of emissions, et cetera, et cetera. And I feel that sometimes it's a little bit disjointed from the realities of what South Africa looks like. Now, that said, to your point around the traceability of, you know, carbon emissions in these metals, one cannot ignore your customer, right? We have to think about the customer that we're selling to. And on average, in the last 2 decades, the biggest customer for PGMs has been Europe. So we can't ignore what their needs, right? So you've got great companies, and I think some of them are sitting around here that have, you know, started solar plants to try and as much as you're combating costs from an ESCOM perspective, but you're also at the same time reducing emissions, and that's all great. But if you just think about what we need as a country and what our product is and how we then sell that product profitably, we've got a lot of problems on the S side. And you've heard a lot of developing countries that are mining-based talk about the license to operate, and it comes back to that point I highlighted earlier around the impact of communities, because if we are blind to the needs of communities and you operate in communities that have 60-70% youth unemployment, and you are not seen to be generating value that comes back into that community, then it becomes a little bit troublesome, because they're not going to feel as part of that problem. So I know a lot of people, when they say ESG, all we ever think about is the environment. I would like to maybe argue it slightly differently and say in South Africa we've got an S problem that us around the room here and people that are online need to be really thinking hard about as to what is our fit in the world given the problems that we've got, and what is our export. From a G perspective, I think the kings of this world, King 1 up to 4, and I understand they're looking at 5 now. I think that largely covers governance. So what we do when we look at boards and executives in the companies, we're trying to make sure that we invest in companies with the highest levels of governance, because what we have seen, and maybe some of the miners won't remember it here, Steinhoff, you also don't want those kind of companies, because it sort of erodes confidence from investors. So when you invest, particularly in a sector that demands the quantum of capital investment that we're talking to, you want, from a governance perspective, to be as solid as you can.
Wow, very strong stances there, but I really love the social part, because, as a country, and I've certainly experienced it when you guys nearly threw us out of a room because we were trying to shut a mine. But yeah, I really have seen that stance that you guys actually hold very strongly. And even on the governance, lately you've taken strong views that were not really for the price, but really around governance. So that's really good. Adrian, you touched on this, the hydrogen and battery electric vehicles economy already. How are investors looking at this? And how are you looking at the potential role of PGMs in this economy? I certainly, maybe I'm too old. When all of this started, I was youth. I'm no longer youth. Don't
In
be fooled by the
ANC
look.
terms, you always use. Come on, just join the right party.
So yeah, it's taking so long. So how do you think investors, as investors, how do you think this is, what is the role that investors can play in this economy, and how do we actually speed it up? Is it possible for investors to speed it up?
You mean like in adoption of uses of platinum, or?
I think both, in supporting, hydrogen economy in some, and yeah.
Let's categorize investors. So like, you've got shareholders who believe in the fundamentals of the commodity, and you've got investors who want to innovate and develop new tech that may use PGMs. So let's distinguish that, and let's just make this simple for anyone modeling PGM demand on hydrogen. You can put 0 in your model for the next 10 years. Okay, and I'm coming from a sell side perspective. We need to model things that move the dial. And I appreciate that there is a space for platinum in the use of hydrogen, but cost of hydrogen is too high. Okay, so where it will manifest, I think, is in China. So abundance of green electrons there will make the production and cost of capital so much lower. It's already, I think, close to $2, whereas Europe is sitting at like $7 to $10 per kilo. And so those projects will never come off, because no one will sign a supply agreement. So it's a chicken and egg scenario. You need the supply agreement to build a project. And so no one is going to build those projects. And so you won't achieve efficiencies of scale like the Chinese can. That's the first problem, right? So, you know, like investors are willing, they got the cash, they got the capital, but I think like the biggest problem in the EU is over-regulation, right? So that is one issue, and there's a million other issues that need to bring that cost of capital down. But the other problem is, like, China is so far advanced that they don't need PGMs per se to produce hydrogen, green hydrogen. They can use alkali tech and even nickel-based catalysts. So I think, you know, there will be lots of green hydrogen, but it's hard to believe that platinum will find an avenue of demand that is meaningful. It certainly will be in PEM in the small applications, but I think it's a long way away, not in the next 10 years.
So there we go, ladies and gentlemen. Just put a 0 into it because it's not going to work
Yeah, like,
for
I mean,
PGM players. Yeah, okay.
Not to be a downer on that, but like,
Yeah.
it's not a meaningful
I think we're
avenue.
going to need those drinks soon, eh? After this downer.
There are many other, there's much more to talk about that's positive. I mean, like,
Yeah.
and I don't need to like talk about innovation and tech. You can just see the deregulation in the EU, like the recent announcement this year about pushing out the carbon emission targets 2 years. That's also another reason why the stocks ran, right? So things are moving in the positive, and I think the market's too hung up about supply not coming off. Demand just needs to stay flat, and you'll still see a cycle. It's just recognizing when things are starting to tighten up. But we try our best to find out when that is.
That's great. I love the positive side as well.
I know you
And
think that
my
is
time's up.
color-coded with your
One
dress, but, you know, it's also time's up.
Okay, can
No,
I
yeah,
just
of
ask
course,
a
of
second?
course. Ladies, go, please. yeah.
To our funders at the IDC. Thabiso, I mean, are you guys funding any of the beneficiation? I mean, you heard from...
You're stealing my question. This is a question from the audience. Go.
So, you see, I'm
Yeah,
working with you. I'm working with you. I'm not eating into your time. I'm actually helping you. So, you know, are you funding any of these beneficiation opportunities? And, you know, as I was researching, I saw a publication in 2018 where you stated that you support dental alloys, fuel cells, and bars and coins for investment purposes. This was 2018. I'm not going to put you on the spot and ask you how many of those you've done. I'll just ask you whether you are actually investing in that. Have you spoken to Mametja lately about any of...
Wow.
So yeah, I think that people really want to know, are you investing into these PGM beneficiation? And you know, we say this in jest, but when you look at the Sassels of this world, they came from IDC because you guys backed things that were not heard of or were still new. So where are we on that?
So I suppose our mandate requires us to develop new industries. And I think Bernard sitting next to you can attest to that we try as far as possible to develop new industries because we believe those are the industries that will come with employment for our country. Those are the industries that will allow us not to export raw commodities, but to process them internally. We obviously need partners in this thing. I mean, we cannot do it all by ourselves as the IDC. And I mean, you're right about the Sasos of the world that the IDC helped bring about. But I was listening to the presentation that we had from the guy with Palladium and the number of projects that he is busy with. I mean, that if a promoter was to come to the IDC and say, this is the kind of work that I've done to date, how can you help us take this forward? We are more than happy to do that. I mean, we have previously partnered with one of the platinum mines in South Africa to develop what was called the KEL process, which was more to do with the refining of platinum. although it has been stalled for now, the IDC took the initiative and, funded that with risk capital. We put our own equity in that project to try to get it to a level where we could fully commercialize it. So it is, and again, it was a project that was brought to us by other promoters, and we liked it, and we thought this would be an alternative that we could actually invest in. So, of course, in that front, we are open for business, and we are more than willing to look at projects that really make sense and that can, change the social landscape in South Africa. Thanks.
But is, legacies of the IDC is, I think we underestimate the role the IDC has played historically.
Yeah.
When I walk in at the IDC, they greet me like I belong. When he walks in at MMC in Nelspruit, they think he's the new owner. Because 50 years on, what we need to take on the world is beyond individuals and
Correct.
beyond small companies. And I think as a South African, group of people, we're going to have to find ways to collaborate, make bolder decisions. And it's difficult. The world's different to 50 years ago. The political mandate is different. But we have to play the game. We cannot sit and feel sorry for ourselves. I want to come to the PIC with a really shitty question. It's so lacquer. I like this. PIC spoke about the S in ESG. What is the biggest investor in South Africa doing to interact with government to smooth the red tape bureaucracy to stimulate investment? It's not actually a shitty question. It's a relevant question.
It is a relevant question.
Very relevant. Are you... you shout at companies for E and S and G.
Yeah.
What are you doing when you talk to the regulators?
First of all, the finance minister is my shareholder.
So you call him sir and you don't speak to him bluntly.
So context is important. And that context is because the deputy finance minister sits on our board.
Yeah.
These conversations that we've had through the years around S, or even investments that, sometimes people think it's too early or is it too much for the PIC, do you support or do you not support? These investments essentially make their way up the value chain because depending on what it is or what the issue is, it gets discussed at our investment committees and it then gets escalated to our board. So the short answer to that question is yes, the way that we think about the world from a maybe technocrat perspective, from a PIC as an investor, does translate all the way up to, to the shareholder. And as you're well aware, large ships turn and they take a lot of time, to try and steer and turn. And as the PIC, when you look at it from a listed equity perspective, we are, albeit large, we are an ordinary shareholder, and we always try and make sure that in our actions, we also don't disadvantage minority shareholders. So we tend to go through from a process perspective. So when you talk about S or when you talk about G, if, for an example, you had a CEO of Steinhoff that wasn't doing the right things, we take it up in terms of our displeasure. We use exactly the same process as a shareholder with one share would have used. Obviously, your voice is a little bit larger, but essentially, the long answer to the question is we use all avenues that are available to us in the market as ordinary shareholders, and some of those discussions, at least from a strategic perspective, it makes its way through up to the shareholder, and collaboration is one example. And I know it doesn't talk to the S, but with Anglo American, the AP Ventures is one example where at the time when the project started or when the fund started, we didn't have a mandate to invest in that particular instrument, right? Which would then have required, investment committee, board engagement, and client engagement as well to try and get that particular instrument and for the PIC to invest in that instrument. It is just but one example of how we do what we do.
Now, I allowed you 3 minutes for a very quality answer, which was not the answer to the question I asked. Thank you for that answer. I will try and formulate a question for that answer. But the question I did ask you was around red tape and regulation.
Sure.
And as a large investor, do you make your views known?
Correct.
Do you have a view that in some instances, perhaps there's a regulation problem, an over-regulation problem?
Sure.
And do you share that also with your
With the shareholder? Oh, definitely. Because again, as you can imagine, so we've got clients and shareholders. From a client perspective, if the mandate allows, it's a lot easier because then we don't have to go through that process. What we then do is we look at, the ease of doing business, our ability to invest in any project, and if there is certainly something that we are picking up in terms of maybe we can't attract an overseas shareholder, we certainly do engage with our board, and it makes its way up through to the shareholder.
And please keep on doing that. Please keep on doing that, because I honestly do think smarter regulations could perhaps unlock opportunity. Adrian, I want somebody to pinch you and just see that it's really you. Because, you're normally so negative and despondent, and today you're so bullish. Are you sure it's you, dude?
You caught me at a good time, maybe.
Yeah, we caught you at a good time. So, this morning I woke up, I laughed at the calculation of the tariffs, I cried about the size of the tariffs. During the day, it sounded like, but PGMs are actually excluded on Annexure 2, page 63, sub-point 17. But the share price collapsed. So I'm not asking a share price, but the market is confused. Just bring today's share price performance into the context of the noise.
Not at all. I think we're talking about industrial metals, and if tariffs are in place, you're talking about lower growth outlook. Simple as that.
So the fact that platinum is excluded makes no difference.
Yeah, they heavily rely on our platinum. They heavily rely on palladium. They would never tariff that. That would hurt them directly. The tariffs are directed to end products.
Yeah.
And that's certainly the drive is obviously to bring manufacturing back, not to tax individual ingredients. But the reaction is perfectly validated, and if you're dig it deep into autos, the US consumes a lot of PGMs, and say autos declined 10% this year because of the impact on higher prices. You're talking about 200,000 ounces, 250,000 ounces palladium. 20%, 500,000 ounces suddenly of palladium. It's meaningful, but the bigger picture is what is GDP growth like for the rest of the world, and how does that impact auto sales? And everything is down except gold. So perhaps that's something we should be buying.
I'm not saying a word. I don't understand gold. I don't even like the rolling stuff.